Tuesday open Overwatch. 6 different angles. 1 read. Position management, not thesis change. 6 separate analytical angles were built into Tuesday's open. Each was assembled independently. Each carried different inputs. Each landed on the same verdict. That is what gives the read its weight, and that is what the next 8 minutes will walk through. Angle 1. Institutional positioning. The commitment of traders report still shows asset managers net long 995,790 S&P 500 contracts, leveraged funds still net short 403,456. That is the same 1.4 million contract structural war that defined Sunday's read. Monday's tape did not resolve it. Monday's tape did not break it. Monday's tape simply chewed off some of the easy continuation without giving either cohort the resolution they need. The structural longs did not capitulate. The structural shorts did not get squeezed. The friction signal is still there. Angle 2. Macro. The Reserve Bank of Australia decision lands at the Asia session bookend. That moves Aussie pairs but does not move the index complex unless a hawkish surprise spills into the dollar. Wednesday is ISM Services, the only top-tier print of the week with the power to move the curve. Tuesday inherits a bond-equity correlation that flipped on Monday and a dollar bid that refused to break. The path is open. The catalysts that resolve the structural war are not yet on the calendar. Angle 3. Sentiment. Fear and greed bled from 66.6 on Sunday to 62.9 on Monday. Close. VIX held above the line. 2 speeds of mood arguing different sides of the same picture. The crowd is less greedy. The professional is more hedged. AAII bullish dropped to 38.1%. When sentiment cools but volatility expands, the resolution comes from price action, not from surveys. Angle 4. Volatility. VIX closed Monday at 1829. VVIX printed 98.29, 3 points higher than Sunday and the highest insurance cost in over a week. The term structure clings to contango by just 2.76 points. VIX rose 7.65% on a session where SPY was down only 0.37. Vol bid faster than price. That is the signal. The insurance bid getting more expensive while the surface stays calm is the textbook setup for a sharper expansion if the line breaks. Angle 5. The cross-asset hot zones. Crude is above 104. Bitcoin reclaimed 80,000. The dollar is bid. Gold is flat. Every cross-asset signal points to defensive but not fearful. The risk is on enough to keep crude bid and crypto bid. The risk is off enough to keep the dollar bid. Defensive participation is the consistent message across asset classes, not panic and not euphoria. Angle 6. Tactics and signals. SP 500 closed below 7,205. NAS held 27,650. The framework's confluence zone sits at 7,180. That is where institutional positioning, prior day support and gamma gravity all align. That is the line. That is what the framework is watching for the open. 6 angles, 1 unified read. The structural longs did not capitulate Monday. The structural shorts did not get squeezed. The price action removed the asymmetric edge of new continuation entries above 7210 without breaking the structural setup. VIX rose 7.65% on a small down session. VVIX printed 3 points higher than Sunday. Greed faded 3.7 points in 24 hours. 6 angles agree on the surface direction. 6 angles carry friction signals underneath. The composite read is not buy the open. It is also not sell the open. It is participate from defense. 3 time frames, 3 readings, the opening 90 minutes, watching at 7,180. If SP touches 7,180 with VIX easing below 17.5, that is the long, the confluence trade. If SP closes below 7,170 on a 30-minute basis, the bias switches to short. The session frame, position management is the default, a reclaim of 7,210 with VIX below 17.5 rearms a constructive bias. VIX through 18.5 on news triggers full retreat. The multi-day frame, constructive intact, a reclaim of 7,244 on volume confirms it. VIX above 100 plus, a curve inversion is the regime change signal. The single open of day game plan reads as follows. Bias, constructive but compressed. The framework rates the broad regime constructive on the multi-day frame, position management neutral on the session frame, and watching at the levels on the open frame. Size, half size on new entries. Every new long enters at half the size that was available during the recovery leg. Existing exposure trails normally. Invalidation. SP through 7,170 on a 30-minute close switches the read to bearish continuation. The long thesis cancels. VIX through 18.5 on an intraday spike triggers retreat protocol regardless of price level. Exit aggressive longs. Hold core only. Vol long via call spreads remains the cleanest expression of the regime red. Catalysts to watch. RBA decision at the Asia session bookend. Aussie pairs only. Does not move the index complex unless the hawkish surprise spills into the dollar. The first hour print on whether 7,180 holds or fails is the single most consequential read of the day. Wednesday ISM Services is the next major data resolver. When to step away. If the first 90 minutes deliver no clean test of either the 7,180 confluence or the 7,244 reclaim, the day defaults to a chop session. The framework recommends holding inventory rather than adding. Discipline beats activity. The one-sentence verdict, 6 angles read the same picture. The structural longs did not capitulate Monday. The structural shorts did not get squeezed. The framework's confluence zone at 7,180 is the line that pays to be early at. If VIX eases below 17.5, the reclaim trigger at 7,244 is the line that rearms constructive bias. Tuesday is a position management day where size shrinks, stops tighten, and the trader who reads the line beats the trader who reads the headline. The composite synthesis stands. The framework holds the line. The line is at 7,180.